Hey everyone, welcome back to Corporate Decoder. Today, PTACU just filed a Form 8A reporting on its completed initial public offering, and I am seeing a key detail about its trust account that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just went public and raised a significant amount of cash, and we can see exactly how much is sitting in their trust account to fund future operations. This filing is a current report, essentially an update from Patriot Acquisition Corp about significant events that have happened. The most important date here is May 22, 2026, which is when the events in this report took place. The company we are looking at today is Patriot Acquisition Corp, a company that is structured to merge with another business in the future. These are often called SPACs, or Special Purpose Acquisition Companies. Interestingly, this company is incorporated in the Cayman Islands, and its commission file number is 001-43292. Its IRS employer identification number is 98 to 1,903,814. Their principal executive offices are located in Radnor, Pennsylvania. The company's securities trade under the ticker PTACU. This ticker represents units. Each unit is made up of one Class A ordinary share and half of a redeemable warrant. There are also Class A ordinary shares which have a very small par value of $0.0001 per S-share. And then there are the redeemable warrants. A whole warrant can be used to buy one Class A ordinary share for $11.5. The currency used is US dollars, and the units of measurement are shares. This is a filing with the US Securities and Exchange Commission, often called the SEC. It is a current report, meaning it is for significant events. The date of this report is May 22, 2026. The company is Patriot Acquisition Corp. It is incorporated in the Cayman Islands. The commission file number is 001-43,292, and the IRS employer identification number is 98 to 1,903,814. Their main office address in Radnor, Pennsylvania. The phone number is 304-363-4800. Patriot Acquisition Corp is an emerging growth company, meaning it can follow less strict reporting rules. This section covers other events that are important to report. So let's break down what happened. Patriot Acquisition Corp had its initial public offering, or IPO, on May 18, 2026. They sold 16 million units. Each unit had one share and half a warrant. The price was $10 per unit, bringing in $160 million. The underwriter, KBW, also had an option to buy more units, up to an additional 2.4 million, to help with any extra demand. At the same time as the IPO, they also sold 5.2 million warrants privately to the sponsor and KBW for $1 each. These are called private placement warrants and are pretty similar to the ones sold in the IPO. Then, on May 20th, KBW decided to buy some of those extra units, specifically 1.5 million of them. This added another $15 million to the company's funds. They also sold an additional 75,000 private placement warrants to KBW, bringing in another $75,000. And here is the key takeaway. After all these transactions, the total amount of money placed in the company's trust account is now $175,875,000. This is the money that is set aside for the company to eventually acquire another business. This is important because it shows the total capital the SPAC has raised before it finds a target company. Think of it like a savings account for the merger. They've also included an audited balance sheet as an exhibit that shows all these cash inflows from the IPO and the associated warrant sales. This section just lists the exhibits attached to this report. The most important exhibit is 99.1, which is the audited balance sheet. And here are the signatures showing who officially signed off on this report. Thomas Sester, the Chief Financial Officer, signed this report on May 22, 2026. Looking at this filing, Patriot Acquisition Corp has successfully completed its IPO and has a substantial amount of capital in its trust account, thanks to the initial offering and the partial exercise of the over-allotment option. This gives them a good war chest for their search for an acquisition target. It is pretty standard for a SPAC to report this kind of capital raise as they begin their business combination process. The trust account is crucial because it essentially guarantees that the SPAC has the funds to complete a deal and protect investors if a deal doesn't happen. The key metric here is that $175.8 million in the trust account. That is the main number to watch as they move forward. What I'll be watching is how quickly they can find a suitable company to merge with, and what the terms of that deal will be. SPACs have a limited time to find a target, and if they don't, the money in trust is usually returned to shareholders. The risk for investors is that the SPAC might merge with a company that isn't a good fit or is overvalued. This $175 million in trust is the biggest anchor for potential deal value. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. See the Discord in the description.